The Hong Kong Monetary Authority has raised its base lending rate by 75 basis points, in line with the U.S. Federal Reserve. Although the city's major commercial banks have kept their prime rates unchanged so far, home buyers and investors have been urged to be cautious.
As expected, Hong Kong's de facto central bank raised its base lending rate by 75 basis points to 2.75%, the highest level since 2019. The decision came just hours after the U.S. Federal Reserve raised its benchmark rate, also by 75 basis points, after having done the same just last month to battle stubborn inflation. Hong Kong Monetary Authority Chief Executive Ed Yue expects to see more carry trades, which increase capital outflows and weaken the local currency. While he's confident of the city's monetary and financial stability, he urged people to be cautious.
We noticed that some banks had already raised the interest rate cap for newly approved mortgage loans. As the Hong Kong dollar interbank rates continue to rise and gradually track the US dollar interbank rates, banks may also adjust their deposit and lending interest rates, including the best lending rates. The public should carefully assess and manage the relevant risks when making property purchase, taking out mortgage, or making other borrowing decisions.
Finance Chief Paul Chan weighed in with a warning that Hong Kong may be on the brink of a recession, with COVID curbs playing a role.
The external economic situation will continue to worsen. So the export performance of Hong Kong will naturally be affected. Taking the year as a whole, unavoidably we may need to revise our GDP forecast, growth forecast.
Chen, however, insisted that Hong Kong's property market remains resilient.